What is going on? Everywhere you look, there is chaos. It feels like just as we are at a position where we can start learning about money, we're, starting to become financially stable, we're getting our money in order and trying to build and grow businesses and just start investing to build wealth. And bam, the United States just decides to shake everything up. So today I want to talk about first what's going on, like the military operations on Iran, how it may affect our finances, our money, what this kind of conflict can do to the stock market, the cost of living, and real estate, of course, and how to make financial decisions without panic buying, panic selling, or panic doing nothing. What can we do to protect what we have built and even continue to grow? So, first, let's talk about what is happening. On top of layoffs, the house affordability issues, the high cost of groceries, Trump decided to attack Iran, taking out their supreme leader and other top leaders. And you can read more details on that. I will link it down below. But the US has escalated strikes, Iran has responded. The situation, I mean, it could really go either way, and everyone's watching like it's a freaking telenovela because, we have shipping and energy and oil goes through it, and it's just everywhere. So, what is the big deal? Well, it all comes down to the Strait of Hormuz. It's a strait between the Persian Gulf and the Gulf of Oman. And it's not even that big. It's about 21 to 33 kilometers wide. But what makes it a big deal is that roughly 20% to 30% of the global seaborne crude oil, which is about 20 to 21 million barrels of oil a day, it travels through there. It gets transported through there. And so again, you could read more on the details in Ahmed Eldon's Substack. Hopefully, I didn't butcher that, but he's an independent journalist. He was formerly at New York Times, HBO, and a few other ones, but he has a great breakdown on his Substack, so definitely go check that out. But in retaliation, of course, Iran is making that area hostile. They even attacked an oil tanker ship already. So, of course, that makes those ships nervous. Like they don't want to pass through there anymore because they don't want to, get attacked and, of course, lose that oil. So, actually, a similar thing has happened before. If you've been following like the dealings with Iran throughout decades, we've had issues with them before. And actually, in I think it was 2018 or 2019, we had a similar issue where Iran was trying to close down that strait and make it difficult. And the US Navy actually had to step in and escort a lot of tankers throughout that time. And my husband actually was deployed in that area at that time and was on one of those ships that was escorting those tankers. So it was a crazy time during that time as well. But this one seems to be a little bit different because it seems like Iran is just trying to just cause chaos and it's taking a different approach than what was expected. So it's just a little bit different. So I don't know what's going to happen. It's just crazy. But how is this going to impact the US? How is it going to impact us? That's the big question as well. I mean, immediately we saw our gas prices go up. We saw 11-cent increase. We saw that immediately, which then, of course, adds to the stress that many are already feeling in their budgets. And then with gas prices, with higher gas prices, of course, that means it's going to increase the cost of transporting goods, which means then, you might see a higher grocery bill. And then, of course, that can increase inflation. Makes it go up, and then everything just starts to trickle down from there. And then the stock market also had kind of a reaction because with war and things like that, the risk rises. So investors tend to like run off to safer assets and stocks can slide. And so the Monday following the attacks, the stock market definitely had some of that going on. You had energy shares that just kind of like popped and defense stocks increased, like people were shifting to that. Travel of course dropped. Those, I think Delta was one of them that felt it because no one wants to travel in towards that area, and airlines have been impacted, so those stocks decreased. And gold is one of kind of like the safety nets that a lot of investors tend to go towards when the risk gets high. So the price of gold increased and the treasury yields moved higher because of the potential of higher inflation, which we know inflation and the treasury's yields is one of the things that influences and that the feds take a look at when they are deciding to increase or decrease rates, which then, of course, eventually affects mortgage interest rates. And so, just as we were starting to see a decrease in these high mortgage interest rates, like this happens. Okay, so that was a lot, but I just wanted to give a brief summary. Of course, definitely go and look up what's been happening. Stay on top of it because, in addition to the economic impact, there's a lot of other things that are being affected. And me being a veteran, that I have other thoughts as well. And I'm just paying close attention and just like in general, like everything, the political side of it is just crazy. So make sure that you are following that, even if it's just so that way you could keep track of what's happening and how it might impact you with your bag, basically. So the question is, where do we go from here? How do I protect my money or even continue to invest? Well, first, I do want to put like a little caveat. Like, if the thing going on with the straight, if it lasts like a few weeks, we saw a quick effect with the rise in gas prices and stuff, but it'll just come right back down and we'll be okay, right? But if it starts lasting a little bit longer than what was planned, then we will start to feel it. So there's some things that you need to start doing and preparing yourself. And I want to break it down into a two-step method, which basically is stabilize and then optimize. First, let's talk about stabilize and take a deep breath, unclench that jaw. I have that problem. I always have to tell myself to unclench my jaw because I'm always like distressed. But definitely take a breath and you want to stabilize your finances, which means take a look at what your current financial situation is. And this means assessing your finances, doing a financial audit. And I do have an episode on that I will link below, and it goes through doing a whole financial audit. But you want to figure out what is going on with your money so then you could create a plan to stabilize. Like, you need to understand what risks you have. Are you living paycheck to paycheck? Do you have high debt? How are your savings? You need to look at that and start stabilizing that first, because you're going to hear about how it's the perfect time to buy stocks or real estate, but you need to stabilize your finances first. That means paying down debt if possible, or maybe that high interest debt. There's a lot of ways to pay down debt, a lot of strategies. Maybe reducing your expenses. That was one of my strategies in making sure when I left the military that I was okay and that I wouldn't have to work because I reduced my expenses. And also fattening up that emergency fund or starting an emergency fund if you don't have that, and making sure that you start one in a high yield savings account, because a regular bank account, savings account there is barely going to give you anything and barely even keep up with an inflation and with the potential of inflation going up. You want to have it in a high yield savings account that is going to at least help you, those savings have less of an impact from inflation, versus with a bank account is basically you're losing money. So that's going to help you out. I have a high yield savings account with Upgrade. I'll link that below. They have a thing going on where like you sign up and you get $50 once you transfer money into that account. So I'll link that below. It's the one I use currently at this time. But the last ones is, check your job situation. Are you at risk of layoff? Because we've been seeing that going on, especially in the tech industries, specifically like those that are working with like AI or that type of area, because they just, we have this whole AI tech bubble that may or may not burst. But that I'll talk about that in another separate video if y'all want, because that's kind of interesting as well. But yeah, check your job situation. What can you like work on? Maybe build new skills that if you lose your job, you can shift over. So that's where your primary focus should be. I do want to say that during this, don't let the fear of inflation turn into like a lifestyle paralysis, because I'm the last person to say to give up everything and live super frugal. Like that just never tends to have the effect that you want. You end up just like, falling back to your old habits because it's just too restrictive. So just try cutting back, highly categories like your subscriptions, takeout, impulse buys, but definitely keep something that brings you joy, especially with like the political climate or everything going on. Like you need some joy in your life. So figure that out, find the balance that is going to help you stay consistent. Once you stabilize or you realize that you actually have a stable, financial situation, then you can move on to the second step, which is optimize. And this is where you're going to optimize your finances, because during turmoil and everything, historically, during times of like recessions or whatever, there is opportunity that you can take advantage of, especially when it comes to growing your money. So it can be a great time to invest. But I want to say, keep investing boring. That increases that margin of safety. It's kind of like tried and true throughout history of boring investments is what makes you rich. It's what builds wealth. It's that safety. Long-term investing is where wealth grows. It's for your retirement. Just keep that in mind. Your superpower is going to be consistency, because let me tell you, when you start falling into the trap of following trends, as I saw during COVID, we saw it with the Dogecoin and all these other stocks where people were just kind of like following the trend, following the hype. And a lot of people lost money. I didn't lose a lot of money. I just lost like $100 because I was like, well, you know, I was still new to investing, and I was like, let me just try. But I had extra money to kind of like, spend or whatever. It's basically a gamble when you're doing that, like when you're doing short term like trading, or like, and you're going to start seeing that. You're going to start seeing the YouTube videos, the social media, people on, on threads or whatever, starting to say like, you know what, it's perfect time to buy. You need to buy this stock, or this stock is going up, and you need to buy some right now because it's going to the moon or whatever. Who remembers that? Like, leave a comment, leave a moon emoji if you remember taking everything to the moon back in the day. You're going to start seeing that, and you don't want to fall into that trap because it's such a high risk. Again, it's just gambling. And you're going to see like, onesie twosies be successful at it, but it also comes with people that lose. And the majority of people lose money during chasing these stock trends. So for stocks, just keep it simple, stick to your long-term plan, and just avoid all these wartime headlines, because it's going to get volatile for sure. And as far as real estate, because I am a real estate investor, I am just being more conservative with my numbers. As I go out there and look for deals, I am increasing the percentages that I use for like repairs and maintenance and vacancies. Because if, just like grocery prices going up because of the transportation costs, that means like things like, like lumber and other materials that are needed to maybe rehab a property or just do maintenance or repairs, that is also going to go up. I am also increasing the vacancies because people may not be able to afford as much. So I might have to bring down the how much I charge for rent. It may take longer to find tenants. I'm just being more conservative on how I'm calculating my cash flow. And on the other side, I'm also increasing my cash reserves. So, as a real estate investor, you always want to have an emergency, just like you would have an emergency fund for yourself, you have an emergency fund for your properties in case anything happens. I've had that happen during COVID where, we had the whole situation where you couldn't evict tenants or, people couldn't pay. So I had that little buffer and that, kept me afloat. So definitely going to increase my cash reserves. But yeah, definitely being more strict on my calculations when I'm out there looking for a property. But that means there's opportunity right now. And I've been seeing the shift as well. Even though the interest rates went back up, the mortgage interest rates, they were coming down. And so people were starting to, like want to invest or buy. But I've also been seeing that some markets have become buyers markets, or at least a good balance, whereas before sellers kind of like called all the shots. And I've been seeing that. I mean, this recent deal, I was able to negotiate way more than earlier because the ball was at the seller's court, basically. But yeah, there's going to be some opportunities popping up, just like it happened with the 2008 crash. There was opportunity there, of course. So, if real estate investing is something that you are interested in, but you just don't know how to get started, I do have a free 5-day crash course link down below. It's going to send you 5 emails a day that takes you through 5 things to get you started. So, check that out. It's below. But I do want to add a little warning. Don't get lost in trying to buy everything because, again, you're going to start seeing videos, you're going to see social media if you haven't seen it already, and they're going to just kind of want to push on, like, oh my God, this is the time to buy. Like, you have to invest, 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 invest. And definitely you could take advantage of the opportunities, but do not overextend yourself and put yourself at risk. Okay. Let me repeat that again. Do not get lost in the whirlwind of investing because it's the prime time to buy and overextend yourself, or you put yourself at risk of financial ruin if the wind shifts. And with that, I will end this episode. Let me know your thoughts down in the comments if you're watching this on YouTube, or hit me up on Instagram with any comments or questions that you may have. But other than that, I will see you in the next one. Bye. Thank you so much for listening. Don't forget to like and share this episode so others can also find this podcast. Don't forget to follow me on all my social medias listed in the show notes below, where you can also find resources to help you in your financial journey. If you're interested in becoming a guest on the podcast, you can find that information in the show notes. Other than that, thank you so much for your support, and I will see you in the next episode. Bye.